Ever wonder why Bitcoin's price spikes every 4 years? It's a question that sparks curiosity among both seasoned investors and those new to the cryptosphere. The answer lies in a fascinating process known as Bitcoin halving. But what is Bitcoin halving, you might ask? Well, it's a recurring event that happens every 4 years, or more precisely after every 210,000 blocks of Bitcoin transactions. This process cuts the reward for mining new blocks in half, hence the term halving. When Bitcoin was first created by the enigmatic Satoshi Nakamoto, the reward for mining a block was 50 Bitcoins. But as we know, all good things must come to an end, or in this case, be halved. So after the first 210,000 blocks, the reward dropped to 25 Bitcoins. 4 years later, it halved again to 12.5 and so on. But why does this happen? The answer is quite simple: to control inflation. Bitcoin was designed to have a maximum supply of 21 million coins. Halving the mining reward every 4 years is a way to ensure that the last Bitcoin won't be mined until the year 2140. So how does this affect Bitcoin's price? Well, it's a classic case of supply and demand. When the supply of new Bitcoins decreases and demand remains the same or increases, the price naturally goes up. This is what causes the notable price spikes around the time of each halving. But it's not just about the numbers. The halving event is a testament to Bitcoin's innovative design, reflecting the careful thought put into creating a sustainable and deflationary currency. It's a reminder that Bitcoin isn't just a digital coin, but a revolutionary financial system with a carefully planned economic model. Intriguing, isn't it? How a simple reduction in the creation of new Bitcoins can cause such a stir in the market. But as we delve deeper, we'll see that the effects of Bitcoin halving extend far beyond just price fluctuations. Delving into Bitcoin's history, we find a key event, the Genesis block, first mined in January 2009. However, our focus lies a few years ahead, starting November 2012. In this pivotal period, Bitcoin experienced its inaugural halving event, a designed reduction in miner rewards that resulted in its price catapulting from about $12 pre-halving to over $100 post-halving, an impressive increase. Our next stop is July 2016. The second halving occurred. Here, the rewards shrunk from 25 to 12.5 Bitcoins, and consequently, Bitcoin's value surged from $650 to a staggering $20,000 by the end of 2017. The third halving, in May 2020, further squeezed the reward to 6.25 Bitcoins. Amidst a pandemic, Bitcoin's value nevertheless soared from $8,500 pre-halving to an astonishing high of over $60,000 in April 2021. To summarize, each halving event, while diminishing miner rewards, has spurred a significant surge in Bitcoin's price. The question that arises then is, what triggers such exponential value growth following each halving? Is it the simple mechanics of supply and demand, or is there more to the story? It all comes down to the fundamental economic principle of supply and demand. You see, every time a Bitcoin halving event occurs, the rate at which new Bitcoins are created is cut in half. This reduces the supply of new Bitcoins entering the market. Now, if the demand for Bitcoins remains strong, this decrease in supply can lead to an increase in price. It's the classic case of scarcity creating value. Imagine for a moment that you're a gold miner. Every day you toil away, unearthing gold nuggets. Then one day someone tells you that there's only half as much gold left to be mined. What does that do to the value of the gold you're digging up? It shoots up, right? It's the same with Bitcoin. Post-halving, miners find themselves in a similar situation. They're still doing the same amount of work, but the rewards they receive for validating transactions and maintaining the blockchain are reduced by half. For these miners, Bitcoins become twice as hard to earn. This increased effort and reduced supply can, in turn, drive up the value of each Bitcoin. Now, this isn't to say that the price will definitely go up after a halving. It's not that simple. There are many other factors at play, including market sentiment, technological advancements, regulatory changes, and more. But historically, it's been observed that halvings have often led to significant price rallies. It's also important to remember that Bitcoin is finite. It's hard-coded into the system that only 21 million Bitcoins will ever exist. As we approach this limit, each Bitcoin becomes more valuable due to its increased scarcity. But what happens if demand decreases or even stays the same while the supply is reduced? Well, that's where market dynamics come into play. If demand is not able to keep up with the reduced supply, the price may not increase as expected. So, as the supply decreases and demand holds steady or increases, the price of Bitcoin tends to rise. Now let's shift our focus to the future, to the next Bitcoin halving event expected in 2024. As we peer into the crystal ball of Bitcoin's future, we find ourselves standing at the precipice of the 2024 halving event. This impending halving will be Bitcoin's fifth, a milestone in the cryptocurrency's journey that has been paved with volatility and growth. Based on historical data and market trends, we can speculate on what might unfold. The previous halvings have often led to a surge in Bitcoin's price due to the reduced supply of new coins entering the market. For instance, the halving in 2016 preceded the colossal bull run of 2017, where Bitcoin reached then unprecedented heights. Similarly, the 2020 halving was followed by an impressive rally that saw Bitcoin shatter previous records and firmly establish itself in mainstream discourse. Drawing from these past events, it is tempting to predict that the 2024 halving might spark another bull run. But let's not get carried away. The world of cryptocurrencies is a wild roller coaster ride full of unexpected twists and turns. While the halving reduces the rate at which new Bitcoins are created, it's essential to remember that the event's impact on price is influenced by a myriad of other factors. These include overall market conditions, regulatory developments, technological advancements, and shifts in investor sentiment. Moreover, as Bitcoin matures and gains wider acceptance, its behavior may evolve. The effects seen in previous halvings might not necessarily replicate in future ones. As the saying goes, past performance is not indicative of future results. So yes, the 2024 halving is a significant event on the horizon with the potential to shake up the crypto world, but it's also shrouded in uncertainty. It's a fascinating spectacle that underscores the dynamic, evolving nature of Bitcoin and the broader cryptocurrency ecosystem. While history often rhymes, it doesn't always repeat. The 2024 halving will undoubtedly be a significant event to watch. So what does all this mean for you, the crypto enthusiast, you might be asking? Well, let's delve into that a bit, shall we? The world of cryptocurrency, as we know, is one of unpredictability and opportunity, and the Bitcoin halving event is no exception. With each halving, we see a significant reduction in the rate at which new Bitcoins are created, which has historically led to a surge in the value of Bitcoin. This in itself presents an opportunity for those who hold or are thinking about investing in Bitcoin. However, it's important to note that while history can give us an idea of what might happen, it doesn't provide a guaranteed roadmap for the future. Just as the value of Bitcoin has skyrocketed following past halving events, it could just as easily plummet. The cryptocurrency market is influenced by a myriad of factors beyond just supply and demand, and predicting its movements can often feel like trying to predict the weather. That's why it's crucial to remember that any investment, especially in something as volatile as cryptocurrency, comes with its risks. And these risks can be magnified if you're putting all your eggs in one basket or basing your decisions solely on market trends. This brings us to the importance of doing your own research. Yes, it's great to listen to experts and keep an eye on trends, but at the end of the day, you're the one who's investing your hard-earned money. So, make sure you understand what you're getting into. Learn about Bitcoin's history, its technology, and how halving events have impacted it in the past. Keep an eye on other factors that could influence its value, such as regulatory changes, technological advancements, and market sentiment. Don't be afraid to ask questions, seek out reliable sources, and perhaps even consult with a financial advisor. In the world of crypto, as with any investment, there's no such thing as too much knowledge. And finally, remember that the most successful investors are often those who are patient, who think long-term, and who don't let their decisions be ruled by fear or greed. Remember, in the world of crypto, knowledge is power. So we've taken quite the journey today, haven't we? We've delved deep into the curious case of Bitcoin halving, a phenomenon that's as intriguing as it is impactful. As we know, this halving event is a testament to the finite nature of Bitcoin and the strategic design of its creator, Satoshi Nakamoto, ensuring that only 21 million Bitcoins will ever exist. We journeyed through the halving timeline, revisiting moments in history where the Bitcoin mining reward was sliced in half. It's fascinating to think that every 4 years, the number of bitcoins awarded to miners for adding new transactions to the blockchain is reduced by 50%. This mechanism, in turn, impacts not just the rate of new bitcoin creation, but also its market price. We examined the delicate interplay of supply and demand and how it's influenced by these halving events. With each halving, the supply of new bitcoins entering the market decreases, creating a potential scarcity that can push up the price. The previous halvings of 2012, 2016, and 2020 have all led to significant price surges, painting a hopeful picture for the upcoming halving. Our exploration of the 2024 halving underlined its potential implications. While history suggests a price increase, it's crucial to remember that many factors can influence Bitcoin's value. It's a complex and volatile market, and while halving events are significant, they're just one piece of the larger cryptocurrency puzzle. Finally, we've discussed what this all means for you, the crypto enthusiasts. The halving event may present opportunities, but it's essential to approach with caution and informed decision-making. It's not about hopping on a trend, but understanding the intricate dynamics at play. As we inch closer to the 2024 halving, it's clear that Bitcoin continues to present an exciting, albeit unpredictable, frontier in the world of finance.